ಅಲ್ವಾ ಫಸ್ಟ್ ನಾನು ಮಾತಾಡ್ತೇನೆ. ಓಕೆ. Hello everyone. I'm indeed delighted and excited and happy to connect with all of you once again on the valedictory ceremony of Parinathi 2020, a first of its kind, a virtual bridge course organized by Mangalore University in association with the Trisha Group of Institutions. Trisha Group of Institutions joined hands with Mangalore University and came out with this very unique event, which saw a great launching ceremony on August 14th, 2020, with the presence of two academic stalwarts, Dr. P.S. Edapadithaya, the Honorable Vice Chancellor from Mangalore University, and Dr. Balvinder Shukla from Amity University, the Honorable Vice Chancellor. And in the launching ceremony, both of the Vice Chancellors pressed upon the need for such programs which gives, opportunities and exposure beyond the four walls of the classroom. Professor Shukla also highlighted about the value-based education and the role that we educators should play in contributing to the holistic development of the students. On the 15th of August, marking the Independence Day, we had Colonel Praveen Hotankatte, the retired Indian Army veteran, who spoke about the career opportunities in the Indian Army and also shared his life experiences in the Indian Army. On the next day, we had a session on Indian logistics and supply chain, or which is I call it as a port management, by Mr. Anil Yendluri, the former IPS officer of Kerala cadre, and also former director and CEO of Krishnamurthy Port, Nellore from Andhra Pradesh, who stressed upon the lesser known facts of the Indian ports, the road towards glory. Followed by, we had a very interesting discussion on India versus Bangladesh bilateral relations and way forward. I had a great honor to get in interaction with Shamim Haider Pachwari, the Honorable Member of Parliament from Dhaka, Bangladesh, and also the Chairman of Dhaka International University. Yesterday, we had a renowned academician, Dr. Ashish Bhattacharya, who is the founder and managing director of Nonlinear Insights from New Delhi, and also the former professor of IIM Calcutta, who spoke on the very important topic of holistic development for the students beyond the academics. And today, we are all here to witness the valedictory ceremony, followed by a session which is very, very important. We have with us today the Chief Economic Advisor of Govt of India, Dr. K. Subramanian, who will be the guest of honor and also who will be delivering the talk on the most important aspect today, which is Indian economic scenario post-COVID-19 pandemic. Now, before I introduce Dr. K. Subramanian, I would like to show you a small video in his recent TED Talk event, which will give the highlights about the today's discussion. Within a while. After that wonderful intro video, with great honor and privilege, let me take a minute to introduce the chief guest of today to the gathering. I will not going to miss a single word because it's a rarest opportunity for all of us to have such a vibrant speaker, a vibrant profile with all of us. Dr. Krishnamurthy V. Subramanian, currently the Chief Economic Advisor to the Govt of India, is a leading expert on economic policy, banking, and corporate governance. A PhD from Chicago Booth and top-ranking IIT IIM alumnus, he authored the path-breaking economic survey that commends ethical wealth creation for a prosperous India. By integrating India's rich economic and spiritual heritage with modern economic ideas, he advocates ethical wealth creation through a marriage of the invisible hand of the market with the hand of trust. Given India's trust with socialistic ideas, where wealth and wealth creators were considered a necessary evil, the advocacy of ethical wealth creation has been hailed as a path-breaking departure in policy thinking. His idea of thalinomics, or a common person pays for a vegetarian or a non-vegetarian thali, has been acclaimed as India's Big Mac Index. The 2019 economic survey, again authored by Dr. Subramanian, laid out the strategic blueprint for India as well as of consumption feed into each other. His push for the behavioral economics of nudge has been acknowledged for its potential to bring behavioral change in India. Dr. Subramanian is on leave from prestigious Indian School of Business, a top business school in India, and the only institution to be ranked in the world's top 100 for path-breaking research, where he is a professor of finance. He has previously served on several expert committees, including the PJ Nayak Committee on Governance of Banks for the Reserve Bank of India and the Uday Kotak Corporate Governance Committee of Securities and Exchange Board of India. He was also the founding member of Bandhan Bank. His research in banking, law, and finance, innovation and economic growth, and corporate governance has been published in the world's leading journal, including the Review of Financial Studies, the Journal of Financial Economics, the Journal of Financial and Quantitative Analysis, and the Journal of the Law and Economics. Before beginning his academic career, Subramanian worked as a consultant with JP Morgan Chase in New York. He also served in the management role in the Allied Derivative Research Group at ICICI Limited, which at the time he was India's top project financing institution and one of the most sought after recruiters in India's top business school. Even while still earning his MBA and PhD, he produced award-winning work. Subramanian's PhD dissertation earned the Ewing Marion Kaufman Foundation Dissertation Fellowship, which recognizes the top 15 PhD dissertations across all disciplines every year. While earning his MBA at the Indian Institute of Management in Calcutta, he was named to honor roll on the institute for being the top ranker in the batch and was awarded the Institute Govt Medal for the most balanced outlook to the business problems. He holds a bachelor degree in electrical engineering from the Indian Institute of Technology in Kanpur, one of India's leading engineering schools. In previous academic roles, Subramanian served on the finance faculty of Govt Business School at Emory University in the United States. He obtained his MBA and PhD in financial economics at the University of Chicago Booth School of Business under the advice of Professor Lucy Zingerls and Professor Raghuram Rajan, the former governor of Reserve Bank of India. His own students have gone to become the faculty at the world's top institutions such as London School of Economics, Indian School of Business, and University of Houston after completing PhD at the world's top PhD program, including Chicago Booth, MIT Sloan, Kellogg, Berkeley, London Business School, Duke, and Emory Universities. After going through such a vibrant profile, the only thing that came into my mind is, wow, how on earth one could achieve at a very short span of time. I had a great opportunity to speak to him and interact with him in Indian School of Business in Hyderabad a couple of years ago. And with one single request, we are having a great privilege and honor to have today with us Dr. K. Subramanian. So without any further time, ladies and gentlemen, boys and girls, presenting to you Dr. Subramanian. Over to you, sir.
Namaskar. Very good afternoon to all the students, all the eminent dignitaries who are also present. It's genuinely my pleasure to speak to young students. You are the future of the country, and on your broad and able shoulders rests the future of this country. I have no doubt in saying that, with the right policies and with the right implementation, India has the potential to be the best in the world. And I say this, having rubbed shoulders with the best in the world, having seen the best, and I say with firm conviction that we Indians are among the smartest people on this planet. And so we have no doubt, in that we should, by pulling our resources together and by implementing, ideas, we can become the best. So I hope all of you youngsters will keep this mission of Mother India in mind when you think about your careers. The country is the mother, and so we all have to actually serve the mother. What I intend to do is to share with you some thoughts on the economy in the amidst COVID. How much time do I have?
30 minutes, sir, followed by a few of important Q&A. Is that okay?
Maybe I'll speak for about 10-15 minutes, and then we can have questions and answers. Would that work?
Not a problem, sir. Absolutely fine.
So, I am an incorrigible optimist. And so for me, every crisis is an opportunity. And I see the COVID crisis also as an opportunity. And I say this with enormous conviction. I don't say it just for the sake of words. I want to point out one, aspect of behavioral economics, which you all should keep in mind whenever you interpret times like these, difficult times like the ones that we are going through. Indeed, this is a once in a century event. So very, very difficult times, undoubtedly. But there is this very nice book written by Daniel Kahneman. The book is titled Thinking Fast, Thinking Slow, which I highly recommend to all of you to read, especially those who want to get into social sciences, for instance, where he talks about what is called the saliency bias. This saliency bias is very important to interpret times like these. What it means is, we tend to overweight recent evidence and underweight evidence that is not very recent. For instance, when we are going through normal times, most of us do not factor in the possibility that a black swan event like the one that we are going through will indeed hit us. So when we are in normal times, we keep thinking that the normal times will continue. On the flip side, though, once a black swan event like the one we are in now hits, we also turn excessively pessimistic and think that the same black swan event will keep continuing and that normal times will not be black. And that's what it's this saliency bias that is oftentimes at the root of excessive pessimism as well. If you are interested in Vedanta, read the Bhagavad Gita and you'll actually learn that nothing is permanent, that these times will also pass. Ye bhi guzrega. And I say that with conviction. You must see that there are a lot of vaccines that are likely to come about by the end of this year, if not end of this year, possibly by the first few months of the forthcoming year, which will then bring back normalcy. So this too will pass, and thinking that this is something which will not pass is just becoming subject to saliency bias. So please don't fall prey to that. That said, let me actually now get on to the economic impact of the crisis. One of the most basic tools for analyzing any economic event is just simple supply and demand. Econ 101, something that we all learn, in our basic economics classes. But it actually has quite a lot of influence in thinking about events like these. So let me first start with demand. Whenever there is a crisis, whether that crisis is because of COVID now, or the crisis that was caused due to economic events like the global financial crisis, the Asian financial crisis that happened, in the late 90s, or even, the Latin American crisis, etc., or crises that are caused by wars, for instance, whether World War I, World War II. Whenever you look at any crisis like this, one of the key things that stands out is uncertainty, risk and uncertainty, especially uncertainty. And without getting into the differences, Frank Knight did work on distinguishing between the two. Risk is something that you actually can, it's known unknowns, while uncertainty is unknown unknowns. So you really can't basically say what kind of things that may manifest. But what happens is, when faced with uncertainty, each economic agent, be it a household, be it an individual or a firm, typically indulges in what we economists call the precautionary motive to save. The precautionary motive to save, which is just economic jargon for a very simple thing, that we all basically think that a bird in hand is better than two in the bush, especially in times like this. In normal times, that's not a good thing, by the way. Those of you who watched my video, and if you don't take risks in life, you actually will not achieve much either. But in times like these, it's most of us indulge in that thinking of a bird in hand is better than two in the bush. In other words, whatever money we actually have, we typically save, because it may be required for us to take care of a rainy day, which is if we fall sick or some of our family members fall sick, we may need the money to take care of healthcare expenditures, or other it's healthcare expenditures during times like these, but it could be job losses and things like that in another crisis. So as a result, what happens is discretionary spending gets maximally impacted. Spending on essentials like food, clothing, etc. Essential clothing, not luxury clothing, but essential clothing, those do not get that impacted. But discretionary spending, like thinking of buying a bike or buying a car or investing in a house, these are the discretionary kinds of spending, or going on a holiday, going to a restaurant, going to a movie. All these typically get impacted, and that happens across the board in any period of uncertainty. So this is key to recognize. It's this uncertainty that actually affects the motive to save. So even if people basically, if the government gives cash in the hands of people, that cash will just go and sit as savings in the bank accounts, will not get spent on discretionary items. This is a very important point to keep in mind. Many of you might have been reading saying, why hasn't the government done enough fiscal spending? I think it's really critical to understand. For instance, if you look at the PMJDY balances, the Pradhan Mantri Jan Dhan Yojana, there are 40 crore bank accounts, and these are typically, almost all of them are bank accounts that are held by the poor. Now, one of the key things that, characteristics of poor households is that if they get 100 rupees of earnings, they spend almost the entire 100. Many times they may even borrow. They don't save that much. The propensity to save is typically very low for households like these. Why am I saying that? Because the data actually shows that since the lockdown started in March, the bank balances in the Pradhan Mantri Jan Dhan Yojana accounts have increased by more than 20,000 crores, which means on average, bank balances have increased by more than 500 rupees per account. Now, this, as I said, is a demography that typically, if they get 500 rupees, they would go and spend it, but almost all of it, but they are saving. And then when you correlate it with your own personal behavior as well, many of you would not have gone to a movie, would not have gone to a restaurant, would not have gone to a vacation. You would have not indulged in discretionary spending over the last 6 months. When you put the two together, you then understand that the economy is basically a collection of individuals like us, all of whom are actually looking to save and not indulging in discretionary spending. And that is why demand, especially for discretionary items, gets impacted. Now, the question is, what can the government do about it? As I said, it is uncertainty. Now, in this particular case, which is COVID, where is the uncertainty coming from? The uncertainty is coming from the pandemic. The fact that till the social distancing norms have to be adhered to, till we are worried that, if we basically go in a group, we may get, infected, till the chances of us, at least in our mind, of us catching COVID is not trivial. In other words, till the vaccine does not come, the uncertainty relating to the pandemic remains. Until that uncertainty remains, actually, even if government goes and actually gives incentives, gives cash, people are unlikely to spend that much on discretionary items. This is a very important point to make, something that I've been consistently saying. Those of you who actually have been reading my media interviews, since March, I have been saying this, that we have to make sure that the bang for the buck of taxpayer money is maximized. Something that, independently, Joseph Stiglitz, one of the foremost economists of our generation, wrote also about, in fact, calling into question some of the fiscal spending being done by other governments, saying, why are you throwing money, into kitchen sinks? Because it's not going to have an impact. And that's exactly what has happened if you see in the United States as well. Checks that have been mailed, unlike in India, where there's a public distribution system which actually supplies food grains, etc. The United States or Europe does not, they do not have these PDS, the public distribution system. And so when, even essential spending has to be supported, checks have to be mailed. They don't have the Jan Dhan, account like us. They don't have the direct benefit transfer facility. So physical checks have to be mailed. So checks were mailed in March, and there is research now showing where has this money been spent. That money has been spent primarily on foodstuffs, a little bit on clothing, and that too not as much. No change in durable goods like television, refrigerators, all that. There's been no change in that spending, which also supports the point that just as I showed for the Pradhan Mantri Jan Dhan Yojana balances, similarly for the US as well, that the money that has been made has been spent only on essential items. So, and that's the argument that Joseph Stiglitz was making as well. So this is one key point to keep in mind, that demand, especially for discretionary items, goes down. And unlike in other crises which are economic in nature, if the crisis is only economic, government can then say these are the economic factors that is creating uncertainty. We will take steps to actually take care of those economic factors and thereby reduce uncertainty, bring back demand. But when the crisis is basically not economic and therefore not of not something that governments can do much about, except basically invest in a vaccine and hope that the vaccine comes in very quickly. So till that time, uncertainty will remain. And let's recognize that this is not a crisis that's been created by any government, any of at least not the governments of countries that are having cases, large number of cases like United States, Brazil, India, etc., or Russia. So these are not a creation of the government. It's an exogenous shock. It's an accident in some sense, but countries are trying to do their very best. But till that shock does not go away, the pandemic does not go away, uncertainty will remain, and demand coming back is actually something that we'll have to wait for. It will happen again, as I said, we will get through this, but it's a question of when, not a question of if. It will happen. And that it is at that time that the demand stimulus will be, the best. I think the bang for the buck will be maximized. Now let me come on the supply side. So that's on the demand side. On the supply side, when you again compare with other crises, I want to distinguish, something like COVID with, let's say, what happens in other crises when you have a war, for instance. When you have a war, what happens is factories get bombed. Think about a factory that, let's say, produces essential items. Let's say sugar, for instance. Sugar mills. Suppose bombs are dropped on sugar mills. What will happen? Production capacity suffers a permanent damage. So to the extent, suppose, let's say, 25 to 30% of sugar production actually declines because these sugar mills are bombed and cannot produce. So what will happen? The supply of sugar shrinks by 30%. Demand cannot go down. Sugar is essential. So what will happen? Because of the decline in supply, a permanent decline in supply, till the time the factories are erected back again, you will have significant inflation. It's a supply side shock. But in the case of COVID, the supply side impact that happened was a temporary one. Why was it temporary? Because when the lockdown happened, labor could not come onto factories. So you effectively did not have hands on the machines to produce. But it was a temporary impact, actually. In fact, if you look at the several of the high frequency indicators, my office tracks these high frequency indicators, several high frequency, hundreds of high frequency indicators. Every fortnight, we look at these. We in fact internally have what is called a fortnightly economic review, where we look at all these and share with the top decision makers. When we look at that data, what we basically learn is that the supplies have come back to anywhere between 85 to 90% of pre-COVID levels, which basically is indicative of the supply side impact being temporary. There is some food inflation that has happened because food tends to be perishable. And so, if during lockdowns, actually, some of the food could not actually reach the retail outlets. And therefore, there was some supply side friction, which has caused some inflation. But that is a temporary phenomenon. I do not expect it to be permanent. So overall, the supply side impact, I expect it to be not as large as the demand side impact. So in net, the impact of the crisis is primarily from the demand side. There could be employment impact as well, but that's where the government has tried its very best to try and basically provide MSMEs a lot of support, because MSMEs are by far the most vulnerable, and they are the ones that employ in large numbers as well. So the Atmanirbhar Bharat package is actually, 3 lakh crores of credit to the MSMEs is a very important part. Last point I want to actually mention is, those of you who studied economics would have actually learned the GDP identity, which is that GDP is equal to consumption plus investment plus government expenditure plus net exports. So, of that, if you look at the fiscal spending, I've already spoken about why we are waiting for the right time to actually do the fiscal spending once the uncertainty is taken care of. But if you look at the overall measures, the COVID package, which is 10% of GDP, even though the fiscal portion is not as large, the credit and the liquidity measures and the forbearance measures that have been taken will impact either consumption or will impact investment, either C or I. So in the GDP identity, Y is equal to C plus I plus G plus X minus M, yes, the G part is actually not as much, but the other parts altogether, which account for 10%, the Reserve Bank plus the government together, will impact either consumption or will impact investment. They have to. That is tautological. And so, and therefore, I actually, the way I like to say this is, the Chinese premier Deng Xiaoping used to say, I don't care about the color of the cat as long as it catches mice. So in a similar way, I don't care about the color of the money. Is that coming in the form of C? Is it coming in the form of I? Is it coming in the form of G? As long as it actually brings in, has an impact on C or I, eventually. X minus M less likely to be impacted. So, tautologically, it has to. So liquidity and credit measures, have to actually impact C and I. Some of those, it's possible. Some of that may not be completely this year, some of that may be next year as well, but eventually they have to impact C or I. That is just tautological. So overall, the package that's been given, amounting to 10%, good part of that will actually, have its impact this year itself. And so the policies that have been implemented will minimize the impact. I'll end with, just a last comment on the reform measures that have been announced. Those of you who follow, other countries, if you look at other countries, India stands out as the only country that, announced a series of reform measures as part of its COVID package. No other country, big or small, undertook big reforms as part of the COVID package. And India did that as part of the Atmanirbhar Bharat package. There are a bunch of them, but I'll just, mention two, which is one is on the agriculture side, especially the APMC reforms and the Essential Commodities Act. APMC reforms, what they do is they actually give the farmer the opportunity to go and sell his produce wherever he wants. Till now, actually, despite 70 odd years of freedom, the farmer has not had the freedom to go and sell his produce wherever he wanted. He had to go and sell only in the local APMC. So these reforms actually now, 74 years after independence, give the farmer the independence to go and sell his produce where he wants. Secondly, the Essential Commodities Act. The Essential Commodities Act also limited the farmer, saying if he wanted to store his produce and say, I don't want to sell my produce, let's say in the first few months when there is a lot of supply, I want to hold, let's say store it and sell it after 6 months. The Essential Commodities Act treated all storage as hoarding, and as a result basically did not give any incentive to the farmer to actually store anything. And thereby, warehouse infrastructure, storage infrastructure has not developed in this country in 74 years since independence because of these kind of restrictions. And that also has been done, has been modified. So together, both of these will have significant impact on the, on agriculture sector. In fact, you're already seeing, if you look at, rural inflation versus urban inflation, for the last 2.5 years, rural inflation lagged behind urban inflation significantly. But now, for the first time, rural inflation is higher than urban inflation, and that's primarily because of the rural incomes increasing, from the agriculture sector, because rural, economy depends a lot more on agriculture. The second part, actually, which is an important reform, is the privatization. So let me just, take a step back and talk about how the industrial policy of the 1950s gave the commanding heights of the economy to the public sector. And that was the socialist era. But even 3 decades after liberalization, in 1991, we had been apologetic about the private sector, as thinking about it as just necessary. But for the first time, this year's economic survey actually had a chapter as part of the theme of wealth creation, which itself was a big departure in a socialist economy, which basically treated wealth as a necessary evil. We did a chapter on how privatization leads to wealth creation. Those of you who have suspicion about this, go and read that chapter. It's not opinion; it's actually just careful data that has been provided, which shows that privatization actually leads to wealth creation. So the policy that was announced as part of the Atmanirbhar Bharat package, which is to say that only in strategic sectors, and that a couple of them, 2 or 3 of them, the government will be in business. In all the others, government will get out of business, because that is the right thing to do to enhance productivity, to actually ensure that the taxpayers' money is utilized properly, not in actually inefficient ways. So as part of the Atmanirbhar Bharat package, the government actually announced this policy on the private sector, which is effectively, we're coming back full circle. In the 1950s, the commanding heights of the economy was given to the state-owned enterprises, and we know what happened, the sloth and the inefficiency that basically our economy was riddled with. Today, we basically this is coming back and saying now the commanding heights of the economy will be occupied by the private sector, and they basically will be, will have greater efficiency. Of course, that also means we'll have to regulate, etc., the private sector to ensure, that bad things don't happen. But this is an important change. So these are the 2 key reforms which will have impact on productivity, I think, and spur the rural economy as well. So as I started out by saying, I have no doubt that the Indian economy going forward will do well. I'll just, I'll remind those of you, I'm sure you're all young, you may not remember, in NDA 1, with the Vajpayee government, when they did a lot of reforms. Today, a lot of analysts actually talk about those reforms with a lot of fondness. I remember, thinking that even when those reforms were being done, these are very, very important. I was actually doing my PhD at that time. But very few analysts, when those reforms were being done, actually said these are really good. Because the impact of that actually happened with a lag. That's inevitable in any large economy. Steps that are taken today, the impact of that manifests after 2.5 years. But most people have very short horizons. Mark my words today, much like in the NDA 1, under Vajpayee, the reforms that were created, the impact they had, for instance, the Golden Quadrilateral that was created, the infrastructure spending. In fact, the entire, growth that happened under UPA 1 was the lagged effect of basically the Vajpayee government. So similarly, now these reforms that have been launched, they will have an impact. Some of that is already starting to show, but will have an impact. Oftentimes, the proximity to what is being done today makes us not really appreciate the strength of these reforms. But history will look back and say that these were very, very important reforms that enabled the productivity in the Indian economy. I'll stop there and actually I can take questions.
Yes. Sir, I think I remember this is my 3rd occasion where I'm seeing you live, and it is as awesome as always. And in such a situations where a lot of people talking about the economic scenarios post-COVID and all that, this was something like directly from the horse's mouth with the facts and figures. And that was the reason why we have invited you, and it was just amazing listening to you. So the personal question before I take up that, we all know you as the best academician and the renowned researcher. Now, how did you feel, and what was your reaction when you first got this opportunity to serve as a chief economic advisor of Government of India? What was your reaction, sir? I'm very sure you still miss the academic and research part of it.
Okay, I think I'll give you a 2-part answer. Firstly, of course, enormously grateful. I think the opportunity to serve your country is a privilege. These may seem like motherhood and apple pie statements, but that is something that I genuinely believe. If you wake me up in the night and say, what did you feel about actually about this appointment, I just feel extremely grateful, because there are enough smart people. There's no paucity of that. Saint Tyagaraja in the in the famous song Endaru Mahanubhavalu Andariki Na Vandanamalu. He says that where there are so many great people, and actually that's indeed how what I feel as well. But to have gotten the opportunity, to actually serve the country is something that I just have gratitude for. Nothing, no other sentiment, just pure gratitude for to be able to serve the country. You asked me about actually researchers. See, in some sense, if there is a role in the government that an academic will enjoy the most, it is this role, because it's you get to write the economic survey, and the economic survey, in fact, so Cass Sunstein, who's actually he's someone who's actually collaborated with one of my professors, Richard Taylor. He's a professor at Harvard Kennedy School. So he looked at the economic survey and said that he's not seen any other country having this high quality of research in a government document. So in that sense, I think this is the perfect role for an academic. It's about thought leadership. It's about thinking deeply and offering solutions. And the economy is something that actually requires long horizons. And us academics, because when you write papers, you start your idea today. The paper gets published 3.5 years later in a top journal. So we are taught to have long horizons, and so some of the stuff that we are doing today, the impact of that will come 3.5 years later. And it's quite possible that some of us may not get the credit for it at all, which is fine. That's there is someone up there who actually keeps a record of the good karma one does, and that's ultimate record anyway. So from that perspective, this is the perfect role for a chief economic advisor. So I must say I actually thoroughly enjoyed, and again, truth be told, I have to thank my bosses as well for being very, very supportive, and they value the inputs, and that's something which enables me to function as well very well.
Great. We academicians always wish you to have a long tenure in your current portfolio, and also a great success in your academics and research. So, getting into the questions with your permissions, banking is something which is a backbone of any country. And Indian banking system has seen a tremendous transformation since the decade. Currently, we're talking about a lot of mergers and synchronizing all these banking activities. Could you throw some light on what would be the repercussions, or what would be the possible effect of all the biggest mergers that we have seen in the recent past?
So first, while I acknowledge that banking sector has seen growth, I will basically, my statement on the Indian banking sector is different. And, here I will basically use, international comparisons. Just to use a parallel from cricket, someone like Dhoni gets appreciated so much because he's proved himself, internationally against the best. He's benchmarked against the best in the world and has proved himself. Someone like, and not as a as a negative or anything, but think about someone like Subramanian Badrinath. He played Ranji Trophy, but did well, fine. But he's not someone whom we would be really looking up to. Why? Because he's done in the domestic circuit, right?
True.
It's the same way I would actually think about the banking sector as well. How does the banking sector rank internationally? The simple point there is that the Indian banking sector is extremely small compared to the size of its economy. So we are far from patting ourselves on the back on the Indian banking sector, far, far from it. I'll give you some facts. India is the 5th largest economy. All of you acknowledge?
Yes.
Right? A banking sector should be proportional to the size of its economy.
Absolutely.
I'll give you 2 examples for economies which actually, at its peak. Japan in the 1980s, when it grew really well. Do you know how many top banks they had how many Japanese banks were there in the top 25 internationally? 15. 15 of the banks, globally top in the top 25 were Japanese. Today, Chinese economy has, in the last 3 decades has grown so well. How many banks are, in the top 100 globally are Chinese? Answer is 18. 18 banks are actually global top 100 are Chinese. Economies that are fraction our sizes, take Sweden, Singapore, which are 1/8 or 1/6 of the size of our economy. How many banks do they have in the global top 100? They have 4. Countries that are actually, fraction our sizes have 4. How many do we have? We have 1 bank in the global top 100, and that is also lowly ranked 55th in the world. You take any measure, the Indian banking sector is puny compared to the size of its economy. So we need to stop basically, sort of thinking like the Ranji Trophy players and start instead thinking as international cricketers, which is to mark ourselves against the best and say, any large economy becomes really large. If we have to become the 3rd largest economy in the world, that can't happen with the size of the banking sector we have. If you look at in terms of among OECD economies, the top 20 economies, OECD economies in the world, if you look at the penetration of credit, private sector credit, which is basically credit that people like you and me or farmers, etc. get. Private sector credit for the typical OECD economy is around 120%, excess of 100%. In India, it's 50%. You take any measure, the Indian banking sector has basically not supported its economy very well. This is in terms of the scale, in terms of, in terms of the quality of its lending. In the late 90s also, we had an NPA problem. We basically grew well after that, and that's why the problem got solved. Nothing happened. Actually, in the banking sector, it's not as if we cleaned up stuff. It's just that a growing tide lifts all boats, and therefore that problem got solved because of growth. But this time that has not happened. See, so over the last 3 decades as well, if you see, we've had periods where we actually let large corporate loans. We basically give those loans, and they don't come back, end up becoming NPAs. Then capital has to be put in. The amount of capital that has been poured into the into the public sector banks over the last few years is of the order of 3 lakh crores. 3 lakh crores is actually, think about it, that's almost 4 times or even more of our healthcare spending. If basically that money had been poured into healthcare, we would have had far better infrastructure to be able to take care of COVID. So, because money has opportunity costs, and where have these monies gone? They've actually not gone into really developmental work. That is the simple fact. So the banking sector, while we can talk about actually short-term measures, really the Indian banking sector, we need to, whether it's the management, whether it's the governance, whether it's the regulation, or even technology, all of them really need to be pruned up. I will say the role of technology in banking. Data analytics, artificial intelligence, machine learning, these are making such large advances today that there is huge opportunity for banks. And our banks need to leapfrog, in that to be able to make the. This example actually will drive home the point very well. Deep Thought is a chess software. Deep Thought was actually, was trained through artificial intelligence. Deep Thought was not even taught the rules of chess. It was just fed the games, just the games with the way they are coded in chess. From that, it learned the rules. It learned the tactics, it learned the strategy of chess, and then went on to defeat the highest ELO rated player ever, Garry Kasparov. Now, compared to the tactics and strategy that is involved in chess, the tactics and strategy involved in willful default or even in default are childish. So if AI and machine learning can actually defeat the tactics and strategy of chess, of the highest rated human ever, I think, using the same AI and machine learning to defeat willful default or default on large corporate loans is very easy, provided we have actually the desire and the expertise to actually understand the potential here. So, our banking sector needs to leapfrog by actually investing these technologies. And I'll say this, that, when I was doing my BTech thesis back 25 years back, then my BTech thesis was an application of neural networks to electrical engineering problems. Neural networks were the precursor to artificial intelligence. In other words, some of this stuff has existed 25 years back, and yet while banks in other jurisdictions have implemented these technologies, we've not done it. We basically have even private sector banks, that have implemented technologies, data, etc., have done only for retail lending, not for corporate lending. There's not a single Indian bank that has gone on and figured out how to do corporate lending really well at scale without actually suffering the problem of NPA by using data analytics, etc. That's the disruption that is required in the Indian banking sector, so that we can generate scale and the quality of lending required to support the economy's growth.
I completely agree and understand the role that technology has to bring in now to transform the banking sector to the heights that you mentioned, benchmarking to the international standards. So financial inclusion has been a great problem for the stock market segment, as well as in the insurance segment. I think I also consider this as a very key factor for the economic growth. How do you see this, and what's your viewpoint on financial inclusion of all these three players?
No, I think financial inclusion is, that's one area where we've actually done very well. I will say, I was referring to the Pradhan Mantri Jan Dhan Yojana, which is actually the largest financial inclusion program ever. And, our banks need to be commended for doing that, for starting these 40 crore bank accounts. But I think we can do more. The number of transactions, now the balances that we have in these PMJDY accounts, the transactions that we have, transactions data that we have for these 40 crore accounts, those can be mined really well to ascertain both the ability to repay of a borrower and the willingness to repay. In fact, third-party data sets can be combined, whether it's actually phone records, actually repayment on that, or other utility bill payments. All these can be combined to actually give more credit to these, using these PMJDY accounts. So I think financial inclusion is not just about starting off bank accounts and basically giving them savings accounts. Financial inclusion is basically giving the entire portfolio of products, of financial products to those at the bottom of the pyramid, be it credit cards, be it insurance, actually health insurance, life insurance, the entire gamut of products, crop insurance actually. And these, even crop insurance mostly has been done through government support actually, but private sector solutions have been far and few in between. But that's where, and insurance actually often suffers what we economists call the adverse selection and the moral hazard problem. But that's where you use data to actually try and reduce your adverse selection and moral hazard problems. So the transactions and the data that you have with these 40 crore accounts actually can be used to really provide a portfolio of financial products and really take financial inclusion to the next level. Don't get me wrong, we've actually done well in terms of in creating these accounts, but now I think time is ripe to actually now leapfrog and do far more with the data and that we've gotten through these PMJDY accounts.
Absolutely. So with your permission, just two more questions to you. There's been a lot of reforms in the income tax and the corporate tax and all that. So what's your latest view on the income tax abolishment and all that, which is probably going to come and could be a game changer in the economy? Do you suggest anything on that side?
Abolition of income tax?
The reforms which has happened, even the corporate tax also, there has been a lot of reforms which has happened very recently, and in the income tax as well, which is otherwise a major source of income for the government. What kind of reforms you would otherwise like to see for the growing country like us?
See, respecting the honest taxpayer, the campaign that was launched by the Honorable Prime Minister last week. In fact, it was, that the hashtag honest taxpayer was among the top 5 trends in the world, last week on the day when it was, so that shows how much of traction it has got. So it's a very, very, good initiative, because overall, if you look at in terms of the tax to GDP ratios, if you look at the Nordic countries, Sweden, Finland, etc., these countries, the tax to GDP ratios there are in excess of 40%, tax to GDP ratios. India tax to GDP ratio is about 8%. Even for instance, some of the OECD economies, United States, where the tax to GDP ratio is not as high as the Nordic countries. But even United States about 18 to 20%. On average, OECD economy is about 20%. We can certainly get there. We need to be we need to be actually creating technologies and processes to really expand the tax net. For instance, one of the key things that stand out is that the proportion of taxes that are paid by self-employed individuals is very low, and especially professionals, for instance. That is very low, and yet there are ways that can actually be using technology to really sort of get a much better sense of the of the tax base provided by self-employed individuals. These are important aspects that the government is working on by implementing a lot more technology, making the the assessment faceless. I think will reduce a lot of the problems that the taxpayer faces. Even the taxpayer charter will actually be, India becomes one of the among a handful of countries which actually will have a taxpayer charter, so that the taxpayer is actually made aware not only of his responsibilities but his rights as well. He has some rights too, and I think these are all very important steps which will help in in expanding the tax base. I think that is expanding the tax base is very, very important. And I think some of these steps in streamlining tax administration will be very useful.
Right. Sir, with your permission, the last question, which is very, very important. From the last couple of years, a lot of us have been talking about entrepreneurship, the startups. I'm so happy to see a lot of young people coming into the business horizon. So do you have any message for my young entrepreneurs and their role that they should play to better the Indian economy? Be the job creators.
Absolutely. So I covered some of this in my in the talk earlier. What entrepreneurs actually should be thinking about is, in a country like India, there are several economic problems that can be that can actually be solved, and in that process entrepreneurs can can not only make can do well for themselves, but at the same time also contribute to the economy. I'll take one example of something that has been done. I was involved with it in a small way. Take Bandhan Bank. Chandrasekhar Ghosh, fabulous entrepreneur, somebody who came from the grassroots. A problem that he saw is that at the bottom of the pyramid, people don't get as much credit. So he started microfinance, basically doing microfinance. He created Bandhan, for that, and then grew and actually has become Bandhan Bank. I was on the board of Bandhan Bank since its inception, and I quit that role only to take up this role. But it was such an enriching experience to go and see. I've actually visited many of the villages and talked to people. I speak Bengali well, and so I actually spoke to individuals, many of the ladies who actually shared their stories of how whether it's it's a garment shop, or maybe they're doing some tailoring, or they actually have started a bangle shop. In ways in which the loans that have been provided to them have enabled them to actually become self-dependent, Atmanirbhar, and that's actually an example of entrepreneurship that has helped the entrepreneur do well for himself, but at the same time has also contributed to society. So the way I would say entrepreneurs must be thinking is look at all the different areas where there is what we economists call market failure. In other words, where supply does not meet demand. I'll give you a few examples. Think about one of the problems that we have in India is the labor force participation rate of females. The fact that the ladies in our country are not able to work as much. Now think about what is the reason of, apart from other social norms, etc., which will take their time, but there are the real constraints that they basically, when women actually have are in their working age, oftentimes they have to take care of their child, they have to take care of children, they have to take care of actually older parents as well. The responsibility for taking care of both children and aged parents oftentimes falls on the women in the family. Now, think about actually a technological solution here. If an entrepreneur comes about and creates a solution, suppose, let's say there are daycare centers and elderly care centers that are technologically equipped, where what is it? So the family, which is the husband and the wife together, have to actually get that assurance that if we put our kid in this daycare center, or if we put our parent in this elderly care center, and thereby the wife goes to work, they will be taken care well. If they actually have that assurance, then indeed the lady of the house and the husband as well would be happy to go for work. And if suppose the women can, let's say, earn 15,000 rupees a month, they may be more than happy to pay a few thousand rupees. Price will not be as important, but quality is important. Now, in this case, basically, so if we think about actually daycare centers that are of very high quality in the following way, which is that on the phone, the woman at any point in time randomly can basically click on an app. That app just connects to a camera, and she gets to see real time what the kid is doing, and she gets to see real time what the parent is doing as well. What will this do? That if those who have to give care know that the parent can at randomly any point in time check, they will basically behave themselves, because they know they're being watched anytime, not just saying, oh, 5 to 6 in the evening you can come and see the kids. But such kind of thing is subject to what Heisenberg called the uncertainty principle, which is that when you watch them, actually the behavior that you see is not the real behavior. But if you actually, if the lady can through the app actually see randomly at any point in time, and then say, look, randomly I'm checking at different points in time, 3, 4, 5 times a day, my kid is being taken care of well, my parent is being taken care of well, or my in-laws are being taken care of well, so I can go and work. I would be happy. I can maybe even 25% of my earnings I am willing to pay as fees for the daycare center, and for the for the parental care. But 25-30%, I have the 70% remaining. But this means then that quality is very important. So the key thing I would tell entrepreneurs, actually many entrepreneurs are very short term, is saying, "Mujhe aaj paisa banana hai." No, you have to be long run. If you create that only high quality creates that long run. Do not, fly by night operators only oftentimes basically end up in Tihar jail. So, you better you focus on quality. So this is just an example. If there is, creation of such high quality centers, saying, we will charge you a little bit of a premium. Why? Because we have to pay the people whom we hire. They have to be high quality, so we'll charge you a higher premium. But you can check any time, we give you the assurance that your kid, your parent will be taken care of well, and this is the premium you pay for. There will be enough demand for it. Actually, right now there is no supply, and therefore there is no demand. This is a classic situation where there's a market failure. Supply and demand are not coming together. Another example, most of us basically, those of us who can afford, want to actually consume good organic products. But when we buy organic, actually we don't know whether it is really organic or it is just something that has been labeled as organic. If there is a supplier which actually says, okay, we will come and actually show actual tests, you can randomly come, we'll again give you the results of and independent third party, really very high quality tests, and say we are providing you organic food that is, undisputedly of high quality, there will be demand for it. The reason people don't want to pay is if they're not sure, oh, if I have to pay 2 times as much for organic milk, but what the milk is being given is not really organic, then people have, problems. So the point I'm going to say in all this is quality is really important. When I look across the board with a lot of entrepreneurs, they don't focus as much on quality and customer satisfaction. When you have customer satisfaction that comes from high quality service or good, then customers stay. Don't look to make a quick buck, look to make the long buck. The quick buck versus the long buck. The long buck actually is what is ethical wealth creation. You go and read the Bhagavad Gita, those of you who are basically read the Tirukural, for instance, it said, wealth that is created without harming anyone else is what is wealth that sustains. Even from a karmic point of view, that is what brings you good karma. And so, earn wealth by doing good karma. And that is how, lasting impact is created.
That was a wonderful message to all the budding entrepreneurs out there, sir. Indeed, very indeed true. Students and all the viewers here, we have come to the end of this session and the valedictory ceremony of Parinathi 2020. And I don't think so we could have any better end than what we had today, with the presence of the Chief Economic Advisor of Govt of India, Dr. K. Subramanian. Before I sign off, may I request my, Senior Group Advisor, Dr. Narayan, sir, to quickly give his concluding remarks for 30 seconds. I think you have to unmute Dr. Narayan, sir.
Yeah.
Yes.
Honorable Chief Economic Advisor, Dr. Subramanian, sir, all the faculty members and large number of students and viewers who are watching this Parinathi 2020 for the last 1 week. Actually, this program was the brainchild of our CEO and the founder, CA Gopal Krishna Bhatt. Today he has told me to convey his greetings and best wishes to all the participants, and especially sir, Dr. Subramanian sir. It was a wonderful opportunity for all the viewers and the students to have you as such a person with so much of responsibility. You have spent your valuable time with us, and I'm really very happy that this kind of Parinathi 2020 was a great success. In fact, the very objective with which we started was that during this COVID, the calamity should be converted into a opportunity. And we left no time to start online or switch to online classes. And the best part is that during these programs like this webinar, Parinathi 2020, we could get speakers of international reputation. And really, I say that students should have got a lot of knowledge, lot of experience sharing, because people who have succeeded in life and who have done wonders in their life have come. In fact, in the beginning, we had 2 vice chancellors, academicians, inaugurating this, and later we had an expert from army, a senior colonel. Then we had a international person, in the sense from Bangladesh, a barrister speaking on Indo-Bangla relations. And yesterday we had a very, very important session on holistic development by none other than an IIM professor from Calcutta. And really, the programs like this, the feedback we get from principals, yesterday we had a principals meet also, shows that this kind of things are well accepted now, and people are slowly taking benefit of this. So we will continue with such activities in future also. And I'm very, very thankful to all the great stalwart speakers who had been with us during the last 1 week. And also I'm thankful to all the viewers, students, and especially to our dynamic principal and anchor of this program, Professor Guru. So wish you all the best and thank you.
So students, that's the fag end of the Parinathi 2020. On behalf of Mangalore University, on behalf of Trisha Group of Institutions, I have actually no words to thank the guest for the today and Chief Economic Advisor, Dr. K. Subramanian. I'm so happy that you've been and spent almost more than an hour with us, sir. Thank you so much. And I would definitely would like to see you in person in Delhi during my next visit. And I wish you a safe journey in the coming days. Thank you so much for being a part of this wonderful session. Thanks a lot. So myself, Guru Prasad, the host of Parinathi 2020 and principal of Trisha Group of Institutions, signing off. Thank you so much.